Welcome to your Calgary real estate market update for July based on June 2026 numbers. June sales improved compared with May, reaching 2,197 sales across the city. Even with the monthly improvement, sales were still nearly 4% lower than the last year and slightly below the long-term average for June. The citywide market is still sitting near balanced conditions with 6,799 active listings and 56% sales to new listing ratio and just over 3 months of supply. The benchmark price for Calgary was $572,500, up from May but about 2% lower than last June. At the surface, those numbers look fairly balanced, but once we separate detached homes, semi-detached, row homes, and apartment condos, the story becomes much more clear. So let's begin with the main story. The biggest pressure point in Calgary right now is high density supply. After several years of strong construction activity, Calgary has more inventory in resale market, the rental market, and the new home market. That added supply is having the strongest impact on apartment-style condos. Demand for higher density homes has cooled, partially because migration has slowed compared with the very strong levels we saw over the last few years. When demand eases, at the same time that supply grows, prices become much more sensitive. That is exactly what we are seeing in the apartment condo segment. The benchmark price for apartment condo fell to $299,000, which is nearly 9% lower than the last year. That is the clearest price adjustment in the market right now. Detached supply, on the other hand, has not expanded the same way. That is helping detached homes avoid the deeper price declines we are seeing in condos, especially in the districts where inventory remains more contained. So the key theme for June is not that the entire market is weak. The key theme is that the supply is building in a very specific parts of market and prices are responding where buyers have more alternatives. Detached homes remain one of the best supported segments in Calgary. There are 1,202 detached sales in June, which was in line with the last year. Activity improved in the lower end under 600 and in the higher end above 1 million, while some of the mid-price ranges saw softer demand. The detached sales to new list ratio rose to 60%, which helped keep conditions relatively balanced. The benchmark detached price was $750,500, up from May and just over 1% lower than the last year. There is still a major difference between districts. The West District continues to perform very well and post year-over-year price growth close to 4%. The city center and West districts are also reaching record high detached prices in June. The Northeast remains the softest district on the market with higher supply, weaker demand, and the prices down nearly 7% year over year. For detached sellers, the market is still active, but buyers are paying close attention to value. For detached buyers, the opportunities are more likely in districts where supply has increased faster than demand. Semi-detached homes continue to show stability. There were 234 semi-detached sales in June and 363 new listings, bringing the sales to new list ratio back above 16%. Months of supply set around 2.5 months, which keeps this segment in balanced territory. The benchmark price was $694,600, up from May and close to the last year levels. The strongest result came from Northwest, West, and City Center District, where semi-detached prices reached new record highs. The weakest district was Northeast, where prices were down nearly 6% year over year. This segment is holding better than row homes and apartment condos, but it is not immune to the shift in a buyer's behavior. Pricing still has to reflect the immediate competition, especially when similar homes are available nearby. Row homes are moving closer to the upper end of balanced conditions. June saw 338 row home sales, with inventory sitting at 1,152 units. Months of supply was nearly 3.5 months, which gives buyers more room to compare properties than they had during the tighter market. The sale-to-new list ratio improved to 55%, mainly because both sales and new listings pulled back during the month. Prices improved slightly compared with May, but year-over-year numbers are still softer across every district. The South District held up better, the row homes prices down about 2% from the last year. The largest declines were in the Northeast and East districts, where prices were down around 10% year-over-year. Row homes are not facing the same level of pressure as apartment condos, but buyers are clearly more price cautious. Listings that show well and are priced in line with the recent sales can still compete. Listings that are priced above the market are easier for buyers to skip. Apartment condos are carrying the most pressure in Calgary's resale market. June sales continue to decline compared with the last year, and year-to-date apartment sales are now down 26%. There were 423 apartment sales in June and 931 new listings, bringing the sales-to-new list ratio to 45%. Inventory reached 2,076 units, which is more than 24% above typical levels. Months of supply is now around 5 months, which puts this segment in a buyer's market territory. The benchmark apartment price was $299,000, down from May and nearly 9% lower than last June. Every district recorded annual price declines. The smallest decline was in the Northwest, where prices were down about 7.5%, and the steepest drop were in the Northeast and East district, when prices declined by more than 14%. For condo sellers, the competition is not just another unit in the same building. It is also another resale condo, new build option, rentals, condo fees, parking, amenities, and building reputation. For condo buyers, this is where negotiating power is visible, especially when similar units are sitting side by side. Hottest and coldest districts by property type. Detached homes. The hottest detached district was West, with a year-over-year price growth to 4% and continuing strength in a supply-constrained pockets. The city center also performed well, reaching record-high detached pricing in June. The coldest detached district was Northeast, where months of supply is elevated and prices are down nearly 7% from the last year. Semi-detached homes. Well, the hottest semi-detached district were Northwest, West, and City Center, all reaching record-high benchmark prices in June. The coldest semi-detached districts were Northeast, with the prices down nearly 6% year-over-year. Looking at the row homes, the hottest row home district was South, not because prices were rising strongly, but because it had the smallest annual decline at around 2%. The coldest row home districts were Northeast and East, both down around 10% year-over-year. For apartment condos, the hottest apartment condo districts were Northwest, which had the smallest annual decline at about 7.5%. The coldest apartment district were Northeast and East, where price dropped by more than 14% compared with the last year. So here is my advice for buyers. Buyers' June numbers show where the negotiating room is beginning to open. The strongest opportunity are likely in segments with the higher months of supply, longer days on the market, recent price adjustments, or several similar listings competing for the same buyer. Apartment condos offer clearest advantage right now, but buyers still need to be careful. A lower price does not automatically mean better value. Building condition, reserve fund health, condo fees, parking, management, bylaws, rental demand, and resale potential all matter. In detached and semi-detached homes, the buyer should not assume every listing is negotiable. Strong homes in a low supply district can still move quickly when they're priced properly. The best approach is to compare the homes against active competition and the recent sold data, not just the asking price. Advice for sellers. Well, sellers, the first step is to understand what buyers are comparing your property against today. The market is still moving, but the buyers are more disciplined than they were during the strongest conditions of the past few years. They're looking at presentation, upgrades, layout, location, fees, and recent price reductions nearby. Detached and semi-detached sellers, they're in a strong districts, may have really good leverage, especially when inventory is limited. Row homes and apartment condo sellers need to be more careful. In these segments, buyers often have several alternatives, and overpricing can cause a listing to sit while newer or better price options attract the activity. A strong launch matters. Good presentation, professional marketing, and accurate pricing are the best way to create momentum. My advice for investors: well, this market requires more analysis and less emotion. Some condo prices are lower than the last year, and they may create opportunities, but not every discount is a good investment. Some properties are cheaper because the building location fees, supply level, or resale outlook is under pressure. Investors should look closely at the cash flow, rental demand, condo fees, upcoming building expenses, reserve fund health, and the amount of competing rental supply. Ground-oriented properties may still offer strong long-term fundamentals in certain areas, especially where supply is limited and rental demand remains steady. But the number still needs to work. The opportunity right now is identifying the difference between a temporary market adjustment and a property with a long-term challenges. Well, for the end, June wasn't a dramatic shift, but it gave us a clearer picture of where the pressure is building. Apartment condos are absorbing the biggest supply increase, and the prices are adjusting as a result. Row homes are also seeing more competition. Detached and semi-detached homes remain better supported, although the result varies significantly by district. For buyers, this market creates a better chance to compare value and negotiate in right segments. And for sellers, success depends on launching with the right price and standing out against the current competition. For investors, the better opportunity will come from careful research, not simply buying because prices are lower. The citywide numbers are useful, but the real strategy comes from a micro market around each property. So, if you would like to know how all this translates to your particular situation, don't hesitate to reach out. Thank you, and have a great month.